You dirty dog, you got yourself a bank? Why are we sitting in Cheesecake Factory talking about this when we can just go over to your bank and that's where we should be doing it? I need to get myself some of those dum-dum suckers. You probably have no idea what I'm talking about. So let me take you back in time a little bit. You see, 2003, I became a financial advisor, and I became a financial advisor not because that was what I was destined to do with my life, because I could think of nothing other than just getting into Wall Street. No, it was out of sheer desperation. You see, I had snowboard shops called Fat Man Board Shop, and everything was going great until the first recession of my professional career hit, and that was the dot-com crash. I'll never forget, I'm driving down the thruway. I had just landed from California, and on the radio, I heard of a plane hitting a tower, and then another plane. Now, we all remember that as being 9/11, and I was going to my brand new store in Orchard Park, New York, my boutique that we had just opened. It was highly leveraged, but you know what? It was gonna crush it. Well, what followed was not what I would define as crushing it. What followed is the facts. The dot-com recession kicked in. This is right around the 2001 timeframe. And I had never been through a recession in my life. Much like many of you listening to this right now. If you're under 38 years old, you've never really lived through the impacts of a recession. Well, that was me back then, 2001. But I saw what a recession did, and I saw what it did to my business. You see, my stores, not just the brand new boutique that I mentioned, were plummeting. So what did I do? I did what all of you would do. I did the hard work. I put a resume out. That's right, I sent my resume out to as many places as I could. I went out and I tried finding a job. Why? Because I needed a job. My retail stores weren't enough to support my car payments and my rents, so I had to figure out something to do. And what did I do? I reacted, just like you would do. But you see, I wasn't proactive in this. This wasn't a pre-thought, this was just desperation. And what happened next? Well, the only people that responded to my resume were Wall Street firms. I interviewed at several of them, took a job at the one that slid the keys across the table. Probably watched that movie Boiler Room, if any of you ever seen that. Ben Affleck slides the keys to, I believe, his Porsche, or maybe it was his Ferrari, across the table and said, "Kid, if you work here, you'll have one of those." The dude played that off. And I'm like, yeah, dude, where do I sign up? Like, this sounds cool. Like, I'm a snowboarder and everything, but like, yeah, I'll play this Wall Street thing for a little bit for a fancy car like that. And there it began. I didn't stay at that firm long. I moved to another firm, a much bigger firm that I thought fit me better, and because a guy that I knew really well told me I should go work for this firm, and that's what I did. Why do I tell you this story? I tell you this story because in life, things will happen to you that will transition you to a different mindset, that will transition you to a different, uncomfortable place where you have to try something new. Well, back then, that was the Wall Street thing. Now, I did really well in Wall Street. But you see, Wall Street was just a stepping stone for me. Wall Street was literally just getting me used to the traditional financial terms and the traditional financial advice that a financial advisor would give you. And I was that guy. I was that guy for 16 years. I was one of the top advisors for that firm. I was actually number 3 in the office for many, many years. Could never hit number 1 because number 1 was my partner, and he crushed it. But you see, that transitioned me into real estate. Why? Because in 2006, I turned the TV on and there it was, a guy in a dilapidated house, and in 23 minutes flat, he flipped that house and made $40,000. I'm like, shit, man, if that dude can make 30, 40 grand in 23 minutes, why can't I? Now, I know you're all thinking, are you crazy? You didn't do it in 23 minutes. Yeah, but that was the runtime for the show. But I wanted to try it. So in 2006, me and my good friend Mike, we flipped the house in Gasport, New York. 2007, I did another one with my partner in the financial firm. We didn't make a ton of money, but I got a feel for it. And in 2008, I bought a building, a really depressed and dilapidated paint store that I had the vision of turning it into a 3-unit strip mall, which I indeed did, but I almost went bankrupt doing it because 2008 hit me. That's right, the Great Recession brought me to my knees. And if it wasn't for Larissa, who back then was my girlfriend, paying the utilities, paying the mortgage payments, allowing me to move friends into my house, I don't think I would have made it through that. So what does all this have to do with today's episode? Is everything. because we all must pivot in our lives. We all must learn something new. Even though we think we know what we don't know, we must learn something new. And that something new came to me in 2014. I was in Salt Lake City doing some snowboarding. And I was working with this guy, Mike, who lent me money, lent me and Larissa money for the flips we were doing back then. Because remember, now we were into real estate and we needed money. And this guy, Mike, was nice enough to lend money. So I called Mike after I got off the hill and I said, hey, Mike, can we meet up? I want to show you a deal that I'm looking at and see if you'd be interested in funding it. He said, perfect. Let's meet at Cheesecake Factory, downtown Salt Lake City, and you can present the deal. So we did. We met up, I'm showing him the deal, but then I don't know what came over me, but I said to him, I said, Mike, how do you lend all this money? Because I was intrigued. I knew Mike was a real estate investor, a big one for that, but he spent a lot of his time lending money. And I couldn't understand, like, why are you lending money when you should just be buying more real estate? And he said to me something that I heard another gentleman, Greg, tell me. He said, the ultimate in real estate is being the bank. So I said, okay, where do you lend from, Mike? And this is where it got weird. He said, I lend from my own private bank. Now that's what I mentioned earlier. I'm like, this dude's got a freaking bank? I thought Mike was rolling, but holy crap, he's got a bank? Well, obviously, when I asked him if we could go to his bank, he told me, I don't actually have a bank, but I mimic what a bank does. I created my own private banking system. And then when I got into asking him what this private banking system was, he didn't tell me what it was. He told me what problem it solved. And it sounded a little something like this. Well, Chris, my private banking system, all I did is I changed where my money goes first. And where it sits now pays me a guaranteed interest rate for the rest of my life. And
I'm like, guaranteed interest. I like the sound of that.
And he went on to say, and every year he gets a dividend. They've never missed one. I'm like, all right, they pay you a dividend and a guaranteed interest rate. Check, check. Got it? Keep going, Mike. He said that growth, that interest in those dividends grows tax-free inside this vehicle that I've got my money in. I'm like, tax-free, what is this thing? Because remember, I'm thinking of it from a traditional financial sense. Because I'm an advisor, I gotta know what this is. What is this thing Mike's calling a private bank? I gotta know what this is. So guaranteed interest, I'm like, yeah, I got a couple of those. Dividends, that's gotta be a stock or something. Tax-free? That's a Roth IRA. What the heck could this be? And he said it's protected against judgments and liens, but then he hit me with a left hook like Tyson. And he said, when you come to me with a deal like this, what I do is I take a loan from my private bank and I give you the money. But you see, the money never leaves my account, Chris. It stays in my account, earning guaranteed interest and dividends uninterrupted. So you put 100 grand in the account, you then take a loan from this private bank thing and you give me the 100 grand. But wait. The 100 grand never left your account? So you got money in your account earning guaranteed interest on an uninterrupted compounding basis, and you're able to take money and give it to me. Whose money did you just give me, Mike? And that's where it began. The big pivot. The point where I really had to learn what many of you have to learn, which can be a really hard learning lesson. You see, everything Mike was talking about in this magic vehicle with this guaranteed interest rate and dividends and a tax-free environment where he gets to lend me money on an uninterrupted compounding basis, all of these have been around for hundreds of years. This place where he put his money, where you might want to put your money, has been around hundreds of years, used by the wealthiest families in history, those of the Rockefellers, the Rothschilds, the Morgans, the Stanleys. I mean, Walt Disney used it, Ray Kroc used it, Doris Christopher from Pampered Chef used it, the sitting president, for crying out loud, uses it. And there's many, many more. We did another video on that. But actually, hold on a second. That gives me an idea of a different pivot. Right now, we're gonna pivot because I need you to click that subscribe button. See, I'm putting all this knowledge out there and I gotta get you to subscribe. And you gotta tell some people about it. So the best way to do that is there's a little bell up top. All I want you to do is I want you to smash that bell, because that'll notify you every time this guy right here puts a new video out. And then, but back to this machine that's been around for hundreds of years. This is where it got weird with that conversation with Mike. Because then I asked Mike, I said, all right, this sounds amazing, and I'm embarrassed, folks. I'm the financial advisor. I'm the one who should know exactly what Mike's talking about, this magic account. Of course, man, Mike, I tell my clients about this stuff all the time, but you see, I didn't. I had no freaking clue what he was doing. And I asked him, Mike, what is this private bank? Where is this place where you're putting your money? And he tells me, well, Chris, it's a specially designed whole life policy. That was the sound of a giant truck screeching to a halt. Because, you see, I thought I knew what I didn't know. And you know, Will Rogers says the biggest problem in America is not what people don't know. He says the biggest problem is what people think that they know that just ain't so, and that was me. Because he just told me that this thing that he was using to lend me money was a whole life insurance policy? Okay, hold on a second. Whole life is one of the worst places you could put money, as Chris Naugle, the financial advisor, would have said, because it's a high commission product. You're going to put money in, you can't take that money out immediately, and all these different things. But then what I didn't know was that he wasn't talking, and he even said it, he wasn't talking about a regular whole life like I knew of. He said it was specially designed and engineered to do what he was doing, which now I understand was the infinite banking concept, pioneered by the late R. Nelson Nash, and can be read about in his book, Becoming Your Own Banker. You should read that book anyway. But this place that allowed these transactions to happen for this Mike guy all started in a specially designed and engineered whole life insurance policy from a mutually owned company that pays dividends. There's nothing complicated, but there is, because it's specially designed. And I had no idea, even though at that point I was about 14 years into the financial advisory world, I had no idea how to design a whole life that would allow someone like Mike to put money into it and then immediately in the first 30 days when the check clears, take the money as a loan and give it to me. But you see, what I did understand and what Mike eloquently described to me is that Mike wasn't playing the same game that I was playing. Mike was playing a game where his dollars that he put into that whole life were making him money twice instead of once. Now, what do I mean by that? Well, remember, Mike would take a loan from the insurance company, from the policy, and he would give that money to me. I was the borrower. I had the deal. I was the borrower. He gave me this money, and Mike charged me 3 points. So right in the beginning, if it was $100,000, I had to give Mike $1, $2, $3,000 in points. So Mike was making $3,000 up front. And then he was charging me, I think it was like 13 or 14%. So every month I would have to take money and I would have to pay Mike back that money. But what I didn't realize is that Mike wasn't just making the points and the interest that I was paying him. No. You see, Mike still had that $100,000 sitting in that account, in that mutually owned insurance company, that specially designed whole life, where he was earning guaranteed interest and dividends. So let's just say he was earning 6%, because that's about probably what he was earning. He would then take the loan from the insurance company, in which the $100,000 that I was using to buy the real estate wasn't coming from Mike's account. It was actually coming from the insurance company's general account. They were advancing Mike part of his death benefit while he's living. That's right, so that $100,000 that Mike gave me, well, that was $100,000 from his death benefit that the insurance company advanced him. And yes, the insurance company charges him interest to use that death benefit while he's living. And back then it was 4%. Today it's closer to 5%. So if Mike was earning 6 and he was then borrowing the money at 4, he was doing what? Well, he was being the bank, folks. Because how do banks make money? Let me pause Mike's scenario and let's just look at what banks do every single day. You work for money and you take the money that you work for and you put it into a traditional bank. And then what does the bank do? Well, they pay you an interest rate. Not guaranteed, but they pay you an interest rate. So let's just say today, the bank pays you 3% interest. But then if you went back to that bank and you asked what they did with the money you put there in deposit, you would find out that they did not take that money and put it in a box with your name on it in the vault. They took that money and they loaned that money out to someone else.
A little to you, a little to you, a little bit to you.
Yeah, they just loaned that money out. And how much do they charge for those loans? Do they charge the exact same amount they're paying you, that 3%? Nope, they charge you more. How much? 5, 6, 8%. And what does the bank make? A spread. pause traditional banks. Now you understand how banks make money. How was Mike making money? The same freaking way. Mike had found a place where he could put his money and make a guaranteed interest rate plus dividends. And that interest rate plus dividends was more than what the insurance company charged him to use that money. So if he was making 6 and only paying 4, folks, he was making a spread just like the big old badass banks are doing every day. Hence, Mike figured out how to become the bank. And instead of making money once, he made money twice. He made a spread on the money, and then he charged my dumb ass 13% plus the points. And I was glad to pay it to him because I needed $100,000 to do my real estate deal to go make money. But when my friend Greg said to me that the ultimate in real estate was being the bank, I now understood it. Because Mike was doing exactly what Greg said. He was being the bank. And he was lending money without having to lose the earning potential on those original dollars. Do you understand what I'm telling you here? Folks, this is not complicated. And then all Mike did is when I paid Mike that interest, right? And I paid Mike those points he wanted, he didn't take that money that I just paid him and put it in somebody else's bank. Oh, no, no, no. Every time I paid him money, where did the money go? Back into the original source, his private bank, which when he put money back into his private bank, it was a repayment of the loan that the insurance company gave him. So now he's using money I paid him because his money's out working for him in a loan to me, and I'm paying him interest. The interest is reducing the loan from his policy, meaning that he's paying less and less and less interest to the insurance company because the balance is going down every month. And who's paying the balance down? I was, not Mike. So Mike got to make more and more and more money because I was just doing what I was supposed to do, paying Mike the interest, getting that property ready to be sold. Mike is making money twice on the same dollar. Folks, this is exactly what all the wealthiest families have done that I mentioned earlier. They're all in the banking business, but they're all in the private banking business. And I said to Mike, Mike, I gotta know how to do this. Can you teach me? And he said, no, I learned from this guy, Brent. And I said, well, darn it, Mike, give me Brent's number. And he did. And I immediately picked my phone up as soon as I got out of that restaurant and I called Brent and I said, Brent, I need to learn what Mike just told me. This private banking thing. I think he said it was the infinite banking concept. And I just went off to Brent. Folks, I'm gonna ask all of you the same thing that Brent asked me. Have you watched the 90-minute video so that you can understand everything I just said in finite detail? Well, if you haven't, I got some really good news. It's in the description of this video right here. Watch that 90-minute video and then book a call and we'll answer your questions about how this could work for your situation. Because that's what I said to Brent. And he made me watch the 90-minute video and then he did a call with me and that was my starting point. Now, when I started that policy, I didn't start lending money like Mike was. You see, I had a whole bunch of debt. So what I did is I started paying off my debts and I started building wealth through my own debts and expenses, which is exactly what you should do. But I'm getting ahead of myself because the first step in this is you watching the 90-minute video in the description. Because if you want to change your financial life, and not just your financial life, your kids' financial lives, their kids' financial lives, this is where it starts. But if you think you know what you don't know, then just stop watching this and go watch some other video telling you to put your money in the S&P 500, which you're gonna lose anyway because the S&P is gonna go down, not up. So best of luck with that. But if you want to change your financial future, that video will do it. Folks, I hope you enjoyed this video and I hope this video at least gets you interested in that first step. We'll see you on the other side, folks.